What is going on, ladies and gentlemen? Man, how are y'all doing this amazing afternoon? What is today? Wednesday, guys. Welcome to Digital Wealth Wednesdays. I'm your host, guys, the Digital GOAT. Now, before I get into, my session, guys, for many of you that don't know me, guys, I'm the Digital GOAT. I'm out of Columbia, South Carolina, guys. And I've been trading in foreign exchange for the past 4 years, guys. You know what I'm saying? So the reason why we created Digital Goats, guys, is one, we want to introduce the average person to investing, guys. I've been traveling pretty much the past year. And it's been brought to my attention that a lot of people don't know anything about investing, which is actually very common, guys. But we're in a new era, guys. We're in a digital era where I think the average person needs to know this information because it's a game changer, guys. We're no longer limited to pretty much the nuances of, the traditional ways of earning income, guys. So if you're out there trying to be an entrepreneur, I would tell you this is definitely a great stream of income to tap into, guys. Or if you're just, an average everyday person just looking for additional stream of income, that's what we're here to provide, guys. Now, as we dive more into it, I will start breaking down things, guys. But as we see, my audience may not be that big right now, guys. So once I get a bigger audience, I will start breaking down things for the audience to do on their own, guys. And if you find value in this channel, I'm gonna tell you right now, please subscribe, please like, please comment, please do whatever, guys. Leave a thumbs up, a thumbs down, whatever the case may be, if you find value within this platform, guys. So now let me go into it, guys. When I'm talking about investing, I'm talking about all aspects. I don't want to just have the approach of coming from a financial standpoint. First and foremost, guys, I am not a financial advisor. Again, I've been doing foreign exchange for the past 4 years. I'm actually just in my fourth year, guys. And I think it's a great stream of income and a great skill set for the average person to tap into, guys. Now, for me, when I'm thinking about investing, I'm thinking of other ways, guys. There's so many people that don't know about real estate. There's so many people that don't know about credit. The number one thing that I think everybody should be investing in is their health, guys, is their health. But my specialty isn't any of those other than foreign exchange, guys. So that's what I'm gonna present to you today, guys. So many of you, if you've already been trading, this is pretty much just, more information for you. If you're new, this is probably gonna be like Chinese math to you guys. But understand, the more you learn, the more you participate, guys, the more you start viewing my sessions, you will be able to start making calculated decisions within the market, guys. Now, for me, let's start off with economics, right? I think economics is so important in this day and age, guys, especially for the person who doesn't even care about news. One is because, guys, when you look at just a dollar in itself, right? Right now, I have up TradingView. If you guys don't know what that is, TradingView is just pretty much as traders, as investors, what we use to pretty much find calculated positions within the market using things that we learn over a course of, education, guys. So within the market, guys, the dollar, right? When you're looking at the dollar, this ain't even the dollar, right? This is USD JPY. Hold on, guys. Let me go into the dollar real quick. So the dollar, right? Many of you, if you're viewing this, you might reside in North America. Guys, I would tell you, if you are American, whether you're American or not, you need to understand your country's currency, right? You need to follow up with whatever your country's currency is, because when these chaos is ensuing, guys, these things are happening to the economy, you can put yourself in a position to combat against it, guys. So you're going to lose money on the economy side, but if you had a skill set such as this, guys, you could be making that money back, if not breaking even. So it's like you never even lost money in its entirety. Understand, trading is a risk, guys, but I'm telling you, it's a risk that pays well with time, with patience. Now, the US dollar, right? This is the DXY. This is an index that most countries have, guys. Most countries have their own index for their currency, right? This is pretty much like a cheat sheet for you to be able to calculate the direction of the market or to see if the market is going up or down. So in layman's terms, guys, is the value of that currency buying, is the value of that currency selling, right? Or appreciating, depreciating, however you want to slice it, guys. What's important is that across the world is inflation, right? So a lot of people are like in chaos because they don't know what's going on in the economy and whether they're going to have a job, whether their job is going to be enough to pay for the expenses that the economy is driving out. That's why I think it's so important for an individual to learn this skill set, guys, because again, it forces you to stay enveloped in the economy. Now, guys, if we're looking at the dollar index, so this is where I'm gonna go into my trading piece. So again, if you're not familiar with this, this may be Chinese arithmetic to you guys, but anybody that is in the trading scene or investing scene already, you understand what I'm speaking, guys. And again, if you are confused, message me, guys. I am looking to provide mentorship, guys, but it just depends on who all needs it, at the end of the day. Now, dollar index, right? I've been looking at the dollar being very hawkish or bullish, pretty much inflated, guys. We've been seeing that pretty much since, let me look at this, May of 2020. Really, we got a spike on January of 2021, but pretty much May of 2021, guys, that the dollar has pretty much been inflated at that time or started to show signs of inflation. We thought, a lot of us thought that the dollar was going to come down. So with everything that's going on, a lot of people are in chaos when it comes to their finances, right, guys? I love the opportunity to be a trader because, again, it has ingrained me into the economy better than I've ever been in my entire life, guys. I wasn't somebody who studied a lot in school. I did very bad in school, actually, guys. I didn't study at all. So the fact that I have something of interest that's actually putting me where I need to be to understand what may be going on ahead of time in the economy, and I can make those transitions ahead of time. Besides, the average consumer is just lost, right, guys? So look at the DXY. We're looking at the monthly time frame. Let me kind of get this, off you guys. Hold on. Let me bring that music down. All right, that's good. What's my window? All right, so look at the DXY, guys, plain and simple. This is the dollar index. I always start off this anytime I'm passing on information to anybody that's in the trading space, guys. If you look at the dollar, it has definitely been inflated, guys. Pretty much it's been going up. It's been very bullish. It's been buying, guys. Now, what most people don't know is that while the dollar was going up, they could have been responding on the other side when it comes to diving in these markets, such as the stock market, such as foreign exchange, even cryptocurrency, guys. You could have been buying the dollar. So while inflation was going up and making everything high, you could have been making profit alone off the dollar, guys. Now, we're going to break down how you guys can do that, but I'm going to just continue my lesson. And then as we dive deeper into the weeks, guys, I'll start breaking down things a little bit further. But it's important to follow your country's currency, guys. That's the message for just looking at the DXY. So for me, I'm in America. I'm going to look at the dollar index, right? So again, we're still looking at the dollar up, right? If you just look at it and you didn't know what hawkish was or bullish was, any of these crazy terminologies that you probably never heard a day before in your life, you can see that physically with your eyes, the dollar, based on, even if you don't know what these candlesticks are or what these bars are that most of you guys are probably saying in your head, you can physically see that the dollar is going up, right? So the dollar has been going up for some time, hence inflation, hence, man, dude, look at those gas prices. Now, when we dive into gas prices, we'll talk about energies such as like oil and things like that, guys. But let's focus on currency right now because everything's going up as far as when it comes to dollar amount, right? I just went to the store the other day. I'm looking at just regular candy that used to be like $1, $2, $3 now. But here's the defining factor that a lot of people don't understand. Us as a consumer, we're adding to the chaos of inflation because we continue to buy. What the data is showing or what we're showing the economy is that even though during inflation where everything's high and everybody's crying about, man, I have to walk to work, or everybody's like, man, dude, I have to carpool to work, or I'm struggling to feed my family. What we're showing the economy is that we can still afford these things, guys, because nobody is stopping going to work. Nobody refused to stop hanging out, partying, things like that for at least a week or a week and a half, guys, to pretty much show the economy that, hey, man, you guys are hurting us to the point we can't afford nothing. But what are we showing everybody? And I understand because when you look at the pandemic that just happened, guys, I understand the need for everybody to get out and be like, man, I'm not trying to be shut in a whole nother year, man. I almost lost my mind then. I completely understand. But what we're showing the economy is that, hey, we're okay during this inflation because I'm still partying. I'm still buying the same trivial things that I don't need, even when I couldn't afford it then. Now I definitely can't afford it, but I'm still purchasing it. Are you guys following me? Now, guys, look at the DXY, right? Again, simple, basic foreign exchange, guys. Anybody that knows that deals with foreign exchange, you understand that, man, this is just an idea of pretty much simple break and retest, guys, especially when you look at the news that was ensuing today, guys. I'm not sure if any of you follow Bloomberg. So I watch Bloomberg heavily. I do recommend that because, again, it keeps you up to date on the economy, but it also applies the fundamentals that you won't see when things happen in the market when you're trading foreign exchange, right, guys? So look at the DXY. We have pretty much a level of support, or look at the dollar. We have a level of support right here, guys. If you don't know what support is just an area where we're looking to pretty much potentially buy the market, right? We've created a level of support. In order to identify that, we need for price to touch around a price zone 2 to 3 times, right? So if you look at this around this area, guys, we've pretty much had 2 times where the price have actually touched that area. So now we have a potential area we can look for buys. Pretty self-explanatory right there, guys, right? If you're building a house, you need a structure as far as support to stand on. If you have, obviously, when you're building the roof part, you need resistance, which is, your top area of your structure. Anything within the market, guys, is considered technically structure, right? So just understand it as that. It's structure, right? So 4-hour time frame. I scale down. If I'm going to look to find an entry within this market, guys, I am going to scale down. But also it's giving me further data points to work with, right? 4-hour time frame. So let's scale down to the 2-hour just to see what's going on. One, the dollar index, if you look at it, guys, is actually not open right now. So the dollar index isn't open currently. It will probably open at 8 o'clock, which is good because if we do find potentially a position within this market, guys, we can undoubtedly say that, okay, after we get a little bit more data after 8 o'clock, when the dollar index opens, we'll have a little bit more clarity on what direction the market is actually trying to travel. You understand me? All right, 1-hour time frame. Now, normally, guys, I would have given you a top-down analysis where I would have broken it down by weekly, daily, 4-hour, which I'm kind of doing now, but I would have just done it in a little bit more depth, just for time purposes, because this is our first call of the year, guys. I'm not going to go that deep into it, but just giving you a broad overview, guys, of what the dollar is currently doing. Right now, when we're looking at it on an hour time frame, we can now create an area where we trap the market, guys. Right, so I can draw this zone back because I want to make sure I gather all the information, because even price breaking through this, even though it didn't create like one of these dip movements, I can still count that as price break. I could still count that as a touch within the market, guys. Now, the biggest thing that we have to see is where our resistance is at, guys, right? Now, what I'm doing right here is just trapping the market, because at this point, we don't have any idea what the market may try to do, because we're in a we're in a consolidation period or a ranging period, pretty much where the market is deciding where it wants to go. But guys, for me, if I'm looking at the market, if it's deciding where it wants to go, I look at where it came from. So until I get further evidence that it's no longer bullish, I have to believe that the market is bullish, because the last move that we came from when the market was consolidating or ranging, whatever you want to say to this, was a bullish move or a buy move, guys, right? Let me get my resistance straight. What's my colors? Oh, there we go. So I do red for resistance and I do blue for support. Henson buy area, Henson sell area. Resistance is going to be my sell area, guys, right? So if I know that price returns back up here, if it breaks out of this zone, now let me kind of give you guys a depiction, all right? So if this is our breakout candle, which means that price is actually breaking up to the upside or breaking down to the downside, however, whatever the market is showing you at that time. Where is my... So we know we'll get a pullback and then a potential area for us to have a target, guys. And at this point, once it reaches resistance, we know we may get, again, the name is in the definition, resistance, guys. We know the market may not want to just break straight through it. If it does, cool, but we may get a small pullback, a big pullback, just for the market to spike all the way up, guys. That's what I'm looking at overall for what the dollar index is going to do. Now, if it starts shooting down, again, I play defense when it comes to this market, guys. I'm not somebody who I was when I first started where I'll say, oh, the market undoubtedly has to do this. That, to me, that's crazy talk. That's suicide. And I can't believe I was doing it for so long, but it made sense because I was losing money when I would try to prove that I was right over the market. Trust me, guys, the market will prove that you are undoubtedly wrong. And it's okay to be wrong. The one thing is to find out, okay, early on if I'm wrong. And if you find out late, take your L like a man or a woman, guys, and reassess the market. I wouldn't, suggest revenge trading, but at the same time, I will tell you guys, like, you can jump back in the market when you lose a little bit of income. Understand, within foreign exchange, it's a risk in its entirety, guys. I'm gonna go into a whole nother call, talking about like how I view when people say that, man, I don't want to do this because it's risky, guys. Well, I'm here to tell you, you probably risk more in your life for less. You know what I'm saying? So don't let, because you may potentially lose a little bit of money to gain unlimited amounts of freedom, guys, turn you away. Now, I'm not telling you to come in here and, go crazy and treat it like a gambling habit and put you and your family on the street. Absolutely not, guys. There's strategies to this. There's techniques to this. There's a mindset to this that will help you make the income that you desire, but you have to be disciplined enough to evolve to that mindset, guys. If you come up here with the expectation trying to make money, which you can, you will lose over and over because you're not really learning the craft and you're not respecting what may be going on in the market. Now, when we're looking at this, guys, this definitely seems like something that I'm gonna be expecting as far as the market, popping out. But we have zones, like there's resistance and support all over, guys. So when I identified this, these are pretty much like high levels that I'm looking at where I want the market to break in either direction, and that'll pretty much show me, okay, what the market is trying to do. So yeah, I could put it down here. You know what I'm saying? I can put it down here, and man, that actually looks very good because that looks like an area that the market broke out. If it's continuing, break, return, break, return, breakout. You know what I'm saying, guys? So again, if you already do foreign exchange, you're following me. If not, you're like, what are you talking about, guys? Understand, I will be breaking this down, guys. I promise you. But this is just our first call of the year. So let's take it step by step. But I'm still giving you the basics. So if you're not writing this down, shame on you. Because again, you cannot do the advanced stuff if you don't come from a core value of the basics within the market. And then all that fancy, fancy doodad stuff will work out for you, right? Now, because I believe, well, we don't have any further information because it's not 8 o'clock yet, guys. It's 7:23. I could probably go to another pair, right? Let's look at another pair that may be moving right now because I want to kind of stay away from the dollar. What I'm going to talk about is British pound, Japanese yen. Well, nah, let's look at AUD. Let's look at AUD JPY because it just makes sense. Because it's up right now, right? Or AUD NZD. Now, this is not a pair that I trade probably at all, yo. I don't even remember the last time I traded this pair. Now, the reason why I'm going to it, guys, to show you more live data is because that we're in the Sydney and Tokyo market session. So the currencies that are booming the most are the Australian dollar, New Zealand dollar, or I wouldn't say booming the most, having the most momentum, right? Australian dollar, New Zealand dollar, Japanese yen, and the Swiss franc, guys, which is CHF. I pretty much stopped trading that a while ago because it just didn't serve what I was looking for. But again, guys, you're going to figure out what pair you undoubtedly want. You know what I'm saying? Don't look at what everybody else is doing. I think at the end of the day, the core value is to try to trade, like indices, things like that, guys. But other than that, like, find whatever pair works for you. You know what I'm saying? Find whatever pair works for you and look at it from that perspective, guys, right? Once this pops up, oh, there we go. Don't worry, guys. I'm getting faster internet as we speak. All right, there we go. I think it's because I had other stuff within the market, guys. Now I had this left over because one of my teammates, one of my business partners, they were actually trading AUD NZD. So I was looking at it from that perspective. But guys, let's look at AUD NZD right now. Look at this ticker. This identifies that this market is currently open. So we can use information within this market to make decisions, guys. Now, me just looking at it, this definitely looks like a downtrend, but I like to go further back to make sure there's not anything that I'm missing, just to make sure, guys, because the one thing you don't want to make a habit is looking at the market and say that, oh man, that looks like that's selling. Oh man, that looks like that's buying. That's ridiculous, guys. You shouldn't really, nobody should trade like that. You want to find calculated decisions within the market and then execute that, guys, once it comes to you. Now, look at this. Now that we looked at it on a daily time frame, we can see that, man, this market has literally been physically riding in an uptrend, right? It's been literally going up based off of the daily time frame. So that sell may have been valid, you know what I'm saying, for that time frame, but overall the daily is showing that, AUD NZD is still bullish. The Australian dollar is stronger against the New Zealand dollar, guys. There shouldn't be no confusion on that, right? So if we're looking for the Australian dollar to potentially be stronger than the New Zealand dollar, then what we would be looking for is the market to buy up. Now, this is just a daily time frame, so you do want to get your support and resistance or trap the market from wherever you're at, guys, and that's what I'm gonna do right here. Now I can see that there was some consolidation right here. Which the one thing that I know is that price loves the attack consolidation. So when I see that, that looks like a perfect break of a previous high, retest, continue the momentum to the upside, guys, right? Now, again, that would be an area. If you guys look, it literally did buy up. So even if we didn't know that, is it going up from this point? It did buy up, guys. You know what I'm saying? Just like from this point, it did sell down. So again, now I got to scale down because I got to figure out what's going on this smaller time frame, guys, that I may not be seeing on the higher time frame, right? Because again, we could be fooled on the smaller time frames, we could be fooled on the higher time frames. We just have to find a medium in between there, guys. Now, it does look like it in fact does want to sell. Now, for me, let me look at this real quick, guys, to see what percentage we may be at. Where is my So this market came pretty much of this entire move 38.2%, right? That's pretty much a shallow retracement. Now, if the momentum is strong, which I would have to look back out on a higher time frame, if the momentum is strong, then yeah, 38.2% means that the market is strong in whatever direction that is, if it maintains. It did close on a pretty higher time frame, guys, a 4-hour time frame. So yeah, I would like to say that this market is probably pushing down. But again, I want to dive deeper to make sure I'm seeing what is projected to me on the higher time frame. Because if something pops up on the smaller time frame, then I got to slow down, right, guys? Okay, same thing. Yeah, same thing. I'm looking at this thing pretty much to sell. Yeah, I like what I'm seeing. Now, here's the thing that trips people up, guys. We are waiting on what? We're waiting on 8 o'clock to come, right? Now, since we're waiting on 8 o'clock to come, we don't want to make no premature moves, right, within this market. Because again, in order for it to be valid, now I could say that this trend is continuing on, but for me, I would like to see a level of resistance. Pretty much, I would like to see price return to this same area to validate that it is in fact selling versus just trusting that I see this with my eyes and then price just shoots up all the way here. One, we identified a percentage that's pretty shallow unless it's providing momentum. Now, for me, guys, I love to see the market back up at these percentages because, again, this gives me more identification to what the overall trend may be doing. And again, guys, you can kind of go into one of my videos that I have on YouTube where I talked about fib. Now I'll break down stuff even more, guys, but a lot of my videos, you guys can go into the past and catch up to speed on seeing what I'm talking about. Some of them, I broke it down into like 9, 15-minute videos where I'm just trying to focus on what I'm trying to tell you. Some of them, guys, they're like an hour long on some of the sessions I've done with my business partners where you guys can view entirely. I will say, yes, there's some value in there, guys, if you're watching it, especially if you're somebody that's already embedded within foreign exchange. If you're new, then again, it'll be like Chinese math, but I'm pretty sure you'll start getting clarity, guys. The biggest thing is probably you guys needing assistance with setting up your MetaTrader 4 or where do you trade or what broker to use. We're going to talk about that in the future, guys, right? So right here, for me, I would want to see a level of resistance. So what I would want the market to do if I'm going to take this trade, well, if I was, I mean, I don't trade this, so I probably wouldn't take this trade. But I mean, it's money, guys. So what I would want to see is something like that. And then I can feel confident that, yeah, the market is going to actually pull down because if it starts breaking above that, my sell is no longer valid. And you don't want to be in this market guessing, guys, or saying that I'm going to just hold to see how, like, nah, man, if it looks bad, get out. You know what I'm saying? Like, truly, guys, if it looks bad, get out of the market. You know what I'm saying? It is okay to take a small percentage loss because you're saving yourself grace versus I'm going to just see. Now, obviously, trust your analysis, your stop loss, things like that, guys, your risk to reward. But again, if you know the money you have, you're not willing to lose a certain percentage or you're not willing to sacrifice a certain percentage for that day, guys, it's okay to close out taking a small L versus let me see what happened. Now, the market may actually play favorable to you and actually be in the right position. Don't be so scared every time you're in a trade that you're ready to pull out immediately because it ain't doing what you want right then and there. That's not how this game works, guys. That's not how this industry works. But when you're in the market, I mean, when you're seeing more signs that it doesn't look like it's in your favor, then yeah, go ahead and pull out, guys. So that's what I would really be looking because other than that, if it broke out, I would be looking for a return back to this resistance and then the market coming back up. Pretty self-explanatory stuff. Nothing that's going to be like earth shattering, guys, right? So I do want to look at USD JPY because we are in the Tokyo session, guys, right? Now, again, I said that the dollar was bullish, right? I'm believing that across the board. So unless other currencies are pretty much letting me know that they're stronger than the dollar, I'm believing, I mean, yeah, that they're stronger than the dollar, then I'm believing that the dollar is going to maintain a bullish sentiment. As you see right here, guys, the dollar has clearly still been bullish. You know what I'm saying? As far as like USD JPY, right? So I can use the information off of my prediction off the dollar, which is not 8 o'clock yet, guys, to use that information to make decisions against other pairs, guys. The one thing I will say is that if you're looking at indexes, please trade that currency. So if you're looking at the Japanese index and you have the ability to trade the Japanese index, which I don't think anybody in America has the ability to do that, or euro. The only futures I saw is for the dollar, and I don't know if that's because of region. So I would assume that other countries would allow you to trade, like if you're in that region, their index currency. But as far as like in America, I've only seen us being able, unless you know it's broker specific. But I'm not going to rattle you guys' brain with all that. We'll get into that to a later process, right? So right here, I have a level of support. We could have the potential possibility of price driving down here, but what I'm looking at is for a price to do what exactly it did. It stopped short of here, broke out, looking for it to return to a previous high potentially, because if not, then we're looking at the market to pretty much come down. But if you look right here, guys, the market is already showing some signs of actually wanting to come up. Let's kind of look at that on a smaller time frame. So there was imbalance here, guys. It was imbalance right here. Now, what you can use Fibonacci for, I know you guys are going to see me pull that up a lot because I use Fibonacci to pretty much measure how, like, what percentage the market has pretty much, you know, shot down or up of a specific candle or of an entire move, things like that, guys, right? Why is it not? Oh, there we go. So this is like kind of like a golden rule or, you know, a rule of thumb when it comes to foreign exchange, guys. What price needs to do if price is valid, right? If price is valid as far as like whatever direction you're looking for the market to go to, it needs to retest 50%, 50, well, 38 to 50% of a previous move, guys. Now, this is an imbalance candle. This is an imbalance candle, guys. What I'm doing is measuring what percentage that this wick rejected. Because again, if it starts pushing down even more, guys, I have to look at the market actually continuing to sell. But right here is a level of imbalance. Now, what imbalance is pretty much an area that the market, that banks left open. They pretty much left away from there pretty fast. So they're going to collect that on the back end, guys. Now, look at this. Price rejected. I like seeing small scenarios like this, guys, because it gives me a little bit more optimism on what I'm looking at, right? With that rejection, that makes me feel kind of comfortable that, okay, we got a rejection right here. Obviously, we want the rejection to maintain, but we got to see what it looks like on a higher time frame and will it close above this? Understand 50%, 618, 786. These are pretty much your zones that you're looking for a price to bounce off of. If your buy was valid, if we were looking for a sell, same thing, guys. You would just have it on the opposite side going in the direction that you're looking for. But again, right here, when I'm seeing these small signs of price rejecting, I like what I'm seeing overall, guys, right? Trying to turn this to, oh yeah, I like that, actually. I probably should have entered in that. And those order block. So you see how that wick rejected, guys? Now, I would have loved this entry over trying to wait for price to close above, but sometimes you need to be patient enough to wait and see because again, guys, is the dollar index open? Let me see if the dollar's index even open. Let me see. It's still not open. Normally it's open by now, but I guess 8 o'clock it is. change this to support so you guys know this is support. But that's all you're doing, guys, is using this information to pretty much create a narrative such as this. So say we did want to enter within this market. Now, this is the part where you guys are going to be like, probably like, well, GOAT, man. How do I even use this information to plug in the market, right? That's a good question, right? So I use these type of highlighted zones, which if you look to the right side, guys, there's prices, right? There are prices in decimal form. So you may not understand it, but this is a price that you can use. Now, the measurement we use to gain equity within this market is pips, points in percentage, guys. That's pretty, just label it as points. That way, you know, you're not confused. So the amount of points that you need, you know, to reach a certain threshold when it comes to your lot size. So if we're looking at a 0.01, which is 10 cents per pip, if the market moved 10 pips, and it's calculated as 10 pips, well, 10 cents per pip, that will be $1 that you've earned in the market, whether you're buying or selling. Same thing if you were in the opposite direction. So say we entered in this market at this specific position, guys. Let's see how many pips we would be up right now if we had entered in that market, and what would it translate to per like lot size, right? 4, 5. The highest it went to was 11. So 5.7, right? So right now we would have been up 5.7 pips, which is not a lot, but it just depends on what lot size you're using. If you're using the smallest lot size, which is a micro, it would be only 50 cents, guys. It would only be 57 cents, guys. If it was excuse me, 57 cents, guys. No, $5. I'm tripping, guys. That would only have been 57 cents. I'm tripping, right? So 50 cents, I'm thinking of crypto right now. So 57 cents, right? So if the market moved 5 pips, that would only be 5 cents. Yeah, I'm tripping, guys. I'm thinking of crypto. That would only be 5 cents, right? So if the market moved 5 pips, guys, that would only be 57 cents that you would be earning, right? Now, if you had a mini lot size, which would have been a 0.1, you would have been earning $1 per point that you were moving. So that would have been $5.70 or whatever we're up currently right now, guys. So also, if you would have went up to the highest lot size, which is a standard, which is $10 per points that you're moving, guys, it would have been $57. So you see how even if the market is moving a little bit, depending on what we're risking, depending on what our account size is, we can make a little bit more equity than everybody else, guys. Now, again, same thing. If it was to go the opposite and you have those lot sizes, that's what you're projecting to lose, guys. I never enter in this market without knowing my risk to reward, meaning that I've already accepted the loss if I've jumped in this market. You see what I'm saying, guys? Because the worst thing you can do is be someone that think you're just going to hit home runs and you're not going to lose in this market, and this market is going to play you and make you fall flat on your face, guys. You know what I'm saying? So what I would use is I would enter this information on MetaTrader 4, guys. Let me see if I can pull up MetaTrader 4, all right? So let's say we were going to enter in this market. Now, we're not going to enter in this market, guys. I'm just showing you for like demonstration purposes. Obviously, if we're trading, we want our risk to reward to be adequate. So we don't want our risk of how much we're willing to gain to be lower than how much we're willing to lose, guys. Now, for me, it just depends on what your lot size is, what your account size is. Like, I don't have no specific notion on like lot size or risk to reward, but I will tell you that you don't want to lose more than 2 to 3% of your account. You lose 3% of your account in a day, in a week, guys, just stop trading. It's okay. Reassess and come back either next week, the next day, whatever you got to do, guys. Now, for me, I would like a position like this if I would have caught it down here, saying that, 20 pips, that would have definitely been like 2% of my accounts personally, because I'm not willing to risk certain, stop losses, because it's better to get kicked out of the market and lose a little than stay in the market and be like, what the hell, guys? But trust me, somebody's going to learn hard. All of us learn the hard way, guys, and it's completely fine. So when I'm looking at this, I want whatever I'm losing, which is the red, to be lower than what I'm trying to gain. But understand, just because you said that you may want it to come 53.5 pips up, that doesn't mean that the market is going to go there. You want to respect the market at levels of support and resistance, guys. So, with you starting off as a new trader, as a new investor, I would probably say somewhere as this high starting off would have been acceptable. That's a pretty good risk to reward. That's a 1 to 2 reward, guys. You're pretty much doubling your profit. If you don't understand that, that's good if you're looking at it from a percentage base. But if you have only a small amount of money within your trading account, then you're never going to be looking at it from a percentage base. You need to look at it from a percentage base, guys, because when you're gaining profit, right? And say, like, let's do math, for instance, right? When it comes to like $100, if you have $100 and you multiplied it and you made another $100, that's 100% gain on your account. That's good. But if people don't see it at that, because they're looking at, oh, I need to make $200, I need to make 300, 400, guys. Like, once you're at 100%, you should be satisfied. So even if you had $20 and you only made $20, that's 100% gain, guys. Understand when you look at it from percentages, you'll start moving a little bit different within this market, guys. Now you see how price is actually coming down. So we don't really have an entry here, but I would like it to stay right there, or at least 786, somewhere along that line, guys. But whatever the market is going to do, I am convinced that we are bullish, but I want to look at what the dollar index is doing. Now, guys, let me go into, okay, the dollar index looked like it opened up. Let me go into a little bit of news real quick. And let me pull up my news real quick for you guys. Where's my, okay. Now, there were two events that went on this morning and this afternoon, guys. So one was Jerome Fed Powell, guys. He's the president of the Federal Reserve, guys. Pretty much they're saying, like, right now he's one of the most powerful men in the world. Now, they're just saying that because of what he's able to do when it comes to or what he's able to pass when it comes to the dollar index. Not literally he's the most powerful man, but when it comes to decision making right now, absolutely, guys. So let's see what time that was. That was like 9:30 in the morning. What's today? Is today the 22nd? Yeah, today's the 22nd. Where are we at? 9:30, 9:30, 9:30. I guess they removed it. Oh, right here. Fed Chair Powell testimony. Hi. And it was, guys, the market started, it really, these past couple of times that the market has had, well, there's been high inflate or high impact news, guys. The market has not really been strongly volatile, but I guess it depends on what pair you're trading. I've been trading pairs that are less aggressive. So I haven't seen a lot of volatility within the market, guys, but 9:30, Fed Chair Powell testimony. Now, where's my notes, guys? Hold on, man. I want to get my notes because I had some notes that I took earlier because it's important, guys. What I told you about economics. It is important that you understand about economics, guys, right? Let me see. All right. So when I was listening to them, one, I will say I salute to Jerome Powell, guys, because, man, they were grilling him today. They were grilling him. It was crazy up there. And I was like, wow, man, for somebody to be so composed and and people are literally trying to get in, because you got different personalities. You got one guy. I didn't catch all the guys' names within the office, nor do I really care. But I'll catch their name when they pop up again. I think one guy from Minnesota, he was either a governor from Minnesota. Man, he was just trying to grill Jerome, man. And one thing I respect is that he kept his composure and he answered what he could answer, guys. And that made me understand that, man. Like, even from their point of view, they're really not knowing what's going on in the market, guys. They just know enough to try to preserve things. So he was just pretty much saying that, man, we have the tools to take care of certain things when it comes to inflation, but not everything. You know what I'm saying? And it's like he really doesn't have the answers. And a lot of the governors up there agreed that he was in a tough situation. But one, guys, understand that energy is the bulk of inflation right now, right? So energy is pretty much why inflation is happening so aggressively and staying so high, guys. And energy such as oil, I probably wouldn't even say like solar energy, but oil, natural gas, guys, because of the war. And now this will have to force me to go into the 2 p.m. call, but I'm gonna just talk about within Jerome Powell, right? So because of the Fed Powell going on today, right? He said energy is the bulk of why inflation is happening. So because of the war, we're having to spend more to fuel up these tanks to pretty much try to protect the Ukrainians out there, guys. Assist the Ukrainians in their war effort. Now, when you hear it from that point of view, it makes sense. So as a consumer, what should I have been doing? I should have been investing in oil. But again, you don't know. Now it's kind of too late because oil is pretty much high, and it does has a possibility to come down, guys, because that's the whole point of them having these meetings, is trying to bring down inflation. And obviously energy is a topic. Now I went into quantitative easing and core inflation. Pretty much they broke down two versions of inflations, guys. I'm still looking at what quantitative easing is. But here's some notes I took. Fed Powell's committee has the tools to tackle core inflation, but not high inflation. So there's a specific part of inflation that they're ready to tackle with the limits that they have within their powers, guys. Now, what Jerome Powell specifically said was that he wants to shrink balance sheets and he wants to raise interest rates. Now, the one thing that I noticed when it came to them saying interest rates is, will this trigger a recession, guys? Now, for us as the consumer, that seems like a bad thing. But again, guys, I just showed you the dollar index. You use the dollar index against the economy, you will make the money back, guys. That's just a hint right there. So if they do decide to raise interest rates, that will actually probably raise, the dollar a little bit aggressive, depending on how much percentage that they raise it by or what their basis points are that they're going to decide to raise it by, guys. And then we may possibly look at a peak where the dollar could start to, what they say, go into a recession. Now, guys, I'm going to go into another day where I talk about like what my views are, or are we going to go into a recession? I personally don't believe, and I want to show you from a technical standpoint, but we don't have that time today. One guy asked, would freezing the budgets help bring down inflation? And obviously for a short-term effect, they said it could potentially, but they're not looking at short term, because these short term moves that we've been seeing where everybody kind of gets excited that the dollar may be coming down, but at a slow pace, which wouldn't signify a hard landing. Let me see. Where was I? Oh, with the budgets, they're looking at it from a long-term, medium to long-term perspective, guys. So what Jerome Powell wants to do is look at this, try to tackle this with a long-term notion versus trying to do a quick fix, and then we be right where we started. You see what I'm saying, guys? So one thing is are we at a neutral level? I'm not sure what a neutral level is, guys, but apparently we're not at a neutral level right now, according to Jerome Powell. And what they're intending to do is use the interest rates to raise it above a neutral level, which I guess will bring the economy in balance. You know what I'm saying? So that's what they're focusing on right now, guys. So and the last thing that I got, which was funny because it went straight into like what President Biden was talking about at 2 p.m., guys, was that inflation was high before the Ukraine war, right? So the biggest problem that we have right now is that there's a lot of jobs that people can get hired at, right? There's a lot of jobs available. But what the problem is that inflation is so high that you'll pretty much be too broke to go to work. You see what I'm saying, guys? because you'll be spending gas to go to work. You'll be spending on, high food. You'll be spending on the transportation, things like that, guys. So a lot of people right now, even though jobs are available and it looks like good from like, I guess, a data perspective, right? The American people right now literally can't afford to go to work with the jobs that are available because the wages aren't pretty much providing what they need to sustain in this economy, guys. Now, this was, when they went into President Biden, did they even say that President Biden was speaking to the 2 p.m., 2 p.m.? Oh no, this was something that I picked up on Bloomberg. So guys, that's why it's the importance of participating in some of these news outlets, because they'll let you know news that may not be on my FX book or whatever news outlet you guys use when it comes to finding investing information to put you in the right side of the market, guys. So that's what I saw today. Now I can go into like what President Biden was saying, but I'll probably save that for a later date. Understand, he really wasn't saying nothing. He was kind of doing what he normally does, where he kind of shifts the blame on what his administration has been doing, guys, and pretty much saying, hey man, it's the Republicans' fault because of this, or the Republican. It really didn't have any resolutions. You know what I'm saying, guys? It was just a bunch of pointing the finger, which I guess is fine. He did bring up a valid point that I wouldn't put my own opinion out there as far as like us, defending Ukraine. I do have my personal reasons behind it, but I understand the thought behind it, guys, because if Russia starts taking over these territories, they are expanding their own regime. You know what I'm saying? So that becomes a problem for any other country when another country has already been downsized and now they're trying to upgrade and spread their influence even further. You know what I'm saying? Because again, they spread it to Ukraine. What could happen is that next thing you know, they're trying to spread it to Europe. Then next thing you know, they're trying to spread it to America. You see what I'm saying, guys? I mean, that I'm not going to talk about like conspiracies or what I think or whatnot, but that seems like it's kind of opening the door for World War III if we weren't to put a handle on things, guys. Again, that's just from my viewpoint. Somebody else may have a different viewpoint, guys. But as you see, the dollar index is open. It's not 8 o'clock right now. So I'm just wondering when it physically opens at 8, we have this momentum. Because like I said, guys, I was wondering why the dollar index wasn't open yet. But normally after 7:30, it'll be open. But you're seeing we have a little bit of momentum boost. That's not enough for me, guys, because we're heading into the top of an hour. So at the top of an hour, this thing could decide to pull down or start selling, whatever it wants to do. But as far as we saw right now, guys, the overall notion of the market is bullish, guys. Nothing has changed when it comes to inflation. Nothing has changed when it comes to inflation that, the Federal Reserve was talking about. Nobody is saying anything where more projections are of a recession, guys, meaning a hard landing, which again, I don't believe that there's a recession coming, but again, we can talk about that a little later. But yeah, guys, that's just pretty much the information that I got for you today. I think it's important, like I said, guys, to be ingrained in economics, and trading is providing that for me, guys. So what I want to do is help, again, bridge that gap between the average person within and investing, and mold that together, guys, because again, you need to know this information. If you don't believe you need to know this information, well, there's going to be a reason why your family is going to be at the same social status that they're at. No shade, guys, but let's understand that everybody's trying to break that circumstances that your family traditionally has been under, especially if you come from a poverty background, guys. And I'm not saying that everybody was like legit poor, like one of those old school London movies, you know what I'm saying? But still, when you're broke, you can't really tell the difference between, poor or broke. You know what I'm saying, guys? So that's all I got for you, man, guys. I really appreciate everybody that participated too. Let me look at AUDNZD real quick. See what it's doing. Okay, it's selling, guys. So, I mean, right now, until I see a little bit further, I would probably wait a little bit more. But to me, it looks like that sell is valid for AUD NZD. And if it did pop up here, I'll probably do it a little bit later. So Again, guys, just being prepared ahead of time will set you, in preparation instead of just trying to say, oh man, it's doing this here. And then the market completely slaps you in the face, man. But again, guys, for you guys that jumped on today, man, I appreciate you for supporting me. Look for more in the future. Obviously, guys, I'm saying we're going to build this community together, especially out of in the Carolinas. So if you're in the Carolinas, please try to connect with me. We plan on doing big things, introducing people to cryptocurrency, NFTs, anything related to investing, guys, real estate, credit, you name it, guys, because all this stuff is important. And I'll be completely transparent for my culture, for my community, as far as like Black people, guys. I know we need this, guys. So I'm passionate about this because I know we need this. I've had a lot of conversations where people don't know what's going on in the economy, but they talk as if they do, guys. And that's going to be a slap in the face when your job no longer needs you. You know what I'm saying? Or you get injured and you can't work a job, guys. This is where things like knowing tools and resources like this come into play. So appreciate you guys. Digital Goats, catch me every Wednesday at 7 p.m., guys. I'm looking to do something on Mondays as well, but also please like and subscribe to the channel and look for some of those smaller videos or smaller settings that I'm doing that's showing you guys techniques or things that I use within the market that can help you be profitable within, foreign exchange, cryptocurrency, even the stock market, guys, because I understand all these markets are universal. You learn foreign exchange, you've pretty much learned how to navigate through the stock market. You just have to get the information from the resources such as the companies and what the news is saying, guys. So appreciate you guys again. I will see you guys next week at the same time. Again, please hit that subscribe button and I will see you guys at the top because we're taking everybody to the top with us. Thank you.